The outcome of the CPI data was actually higher than expected. I mean, compared to last month, but it was more like in line if you look at it's just from the expectation is higher, but it's actually quite equal to the previous month. The CPI has been flat for a couple of months. What it means is inflation is be quite sticky, a bit stubborn to come down, which will cause the Fed to be more cautious in terms of lowering the interest rate. Right? Because the Fed wanted to see at least a few months. From my own anticipation, if I'm the Fed, I always put myself wearing the hat of the Fed. If I'm the Fed members, what would I like to see? I would prefer to see ideally a 3 months of trending down, a minimum of 2. Right? So now it's March data, right? March reporting. If March is still flat to slightly higher, so I would expect to see another 3 months. Right? So now it's March. So that means the earliest interest rate cut will be June, if not July. So if next month is still not coming down, then that may prolong. Next month still like that, it will prolong. Okay? So that's what I mean. So what will be the impact, right, if it's prolonged sideways? So I think again, if I'm the Fed, what will I do, right? There's a few things that the Fed look at. One is the CPI. There's still a PPI data. CPI is a consumer price index, which measure the inflation from a consumer perspective, right? There's also a PPI, producer price, from the manufacturing cost perspective, right? The price. And if the manufacturing side is going up, they may have a worry because later it will transfer to the consumer unless they reduce our profit margin, right? The reaction was actually not so bad after the announcement, right? So there's some pullback after that. It has a more like an intraday, it has a V-shaped rebound, which is a positive sign. I have actually anticipated that as long as it's not very drastic high inflation, I mean, unless the inflation really shot up a lot, like it was only 0.1%, not too bad. But if it's like 0.2 to 0.4, I would say the reaction would be very negative. And that's why since it's not too bad, people already plan. I think if I'm the big fund manager, right, how I would think is, I need to get into a lot more of this growth stock, AI stocks, but it's very high. Right? They would have buy some. So they would have wait for the chance for some pullback to buy, even though it's a bad news. Right? As long as not too drastically bad news. And this is one of those things. Not drastically, there's some pullback. Yeah, I see the funds coming back to buy. Yeah, so there's some support for these strong stocks. But it might be good for those companies that will be negatively impacted if the interest rate cut is prolonged. Right? What would that be? Which is the consumer discretionary. Right? As long as the interest is not cut, then people will need to pay higher interest for housing loan. Then they have to tighten their spending. Right? So when they tighten their spending, it's not good for those discretionary spending. Discretionary spending is those that you can choose not to buy. Right? Like the retail sector will not be good. Or those companies which are high debt, right, would not be good for them. But for tech stock, is a bit tricky how to interpret. Right? For tech stock, they will still be impacted if consumer spending goes down, if they are under the consumer electronics, right? Like Apple selling iPhone. Okay, I don't upgrade my iPhone now. I wait until later on I have more spare money, I upgrade. So they will prolong the upgrade cycle. Or if I have a laptop, okay. Previously, I renew in 3 years. Now, okay, never mind, 4 or 5 years is still fine. Right? So then it will still impact companies like AMD, Intel, or Apple. But for those related to corporate spending, related to AI, they will need to still invest, right, to be competitive. Yeah, otherwise they will be behind. So that creates some resilience in that area. Yeah, for example, NVIDIA, right, there's a lot of demand because they are in the right mega trend. So when they pull back, people want to buy. Right? So I want to remind, this is not asking you to buy NVIDIA, right? You still need to understand how to manage the risk. Yeah, so every stocks, no matter how great it is, you still need to learn how to time it, yeah, how to protect. Yeah, but if you understand this part, then you have conviction. Like for example, I will have conviction on, people get confidence, right, to buy those stocks even though it's a bad news. Yeah, because I know what type of stocks I can buy. And I also need to confirm with the chart. It is not, after trading for so long, I know it's not about my opinion. Because the market go up or down based on a lot of different thinking from different people, right? So I have my thoughts, but I also validate that, yeah, people actually want to come in and buy from the chart, then I will buy. Yeah, so if you know how to leverage on this, then you can really take advantage of the pullback. Yeah, but be cautious of those retail stocks. Yeah, and this could be longer. Right now, based on this, I think the earliest rate cut is likely going to be June. I don't think it's going to be May because it's still sticky. Right? It's not even a trend down at all. Right? It's a flat to slightly up. If you're the Fed, you won't cut yet, right? But what would still cause them to cut will be if the unemployment start to shoot up more, and there are more complaints from the grassroots. Okay, that create, maybe they don't wait too long. They may start to do in May. I would say unlikely. It can even be extended to July. Just that my understanding is they will not want to do it too close to the election, because they don't want to be perceived with helping whoever to win the election, like Biden. Right? If they cut near the election, they will be perceived like they are helping Biden. Yeah, so that will give it around, June. June being earliest, July is the next one, or give it September, but not until the end of the year. Yeah, but again, right, this is all data dependent. Even whatever the Fed says is always based on the data. But I do see from the chart reaction, yeah, it is possible. We have to be very careful, because all these tech stocks and AI-related stocks, they are a bit on the high valuation side. But if you look at the long-term mega trend, right, there's still upside longer term. The price we are paying right now, the higher valuation, we are actually paying for the future growth, right? Index with future growth, which of course there's a high chance to happen based on AI demand. But it could be, if the rate cut come in slower, that means that growth may be slowed down a little bit. Yeah. So you have to be careful for those stocks that are not only riding this trend, but they are more dependent on the end consumer demand. Yeah, those are the stocks will be impacted more if the rate cut is delayed. Yeah. Yeah, so just to choose the right stock. If you choose the right stock, you know, wow, this pullback is great. Because I have a lot of students who say, oh, this stock is too high. The newer student who missed the earlier entry for all these AI stocks, oh, so high, how to buy? Right? You need bad news. But when the bad news comes, are you confident? Right? Yeah. So that's where, if you know what you're doing, you will be confident to buy.